All right, everybody, welcome back to another episode of the Discovering Multifamily podcast. I'm one of your hosts, Anthony Scandariato, here with Red Knight Properties. And boy, do we have a packed show here today. This is episode 236 of Discovering Multifamily, and we have Tim Lyons. Some of you may recognize him. He is a he's also a podcast host, which we could talk about, the Passive Income Brothers with his brother Greg. He's got a lot of moving pieces in his life, but the primary one is he's a co-founder and managing partner of Cityside Capital. He's also a registered broker dealer based out of New York City. So we're going to talk about how he was able to raise capital and still able to raise capital for different multifamily passive income opportunities. And he's also a 18-year plus veteran of the New York City Fire Department. So hats off to him, and is currently a lieutenant in the Queensboro, also where a lot of my family is from. We were talking about that before, but Tim has a really interesting story in terms of how he started Cityside Capital. He's also got a book co-authored with Rob Helms with the Real Estate Guys. Many of you should be familiar with, and Kyle Wilson as well. And he'll talk about that a little bit. And he's got three little girls, so he's always trying to build his income stream and primarily through multifamily and some other real estate asset classes, right? Self-storage, some industrial. So we'll talk about how he got started and with a 3-unit property and, over 6,000 plus units today. So thank you so much for coming on, Tim.
Anthony, I mean, that intro was amazing. It's hard to believe that we're talking about me, but thank you so much for bringing me on the show.
Awesome. Well, tell us about you then. Did I do justice with the intro?
I guess you did. I mean, it's the facts, right? I mean, but I still have to pinch myself every once in a while that I'm sitting in this chair and I'm having a podcast with you talking about these types of topics.
That's awesome.
So yeah, I mean, look, I mean, I was the regular Joe, right? I was Tim, the ER nurse, Tim, the firefighter. Been doing that for, the firefighting at least for a little over 18 years. I was an ER nurse, in different capacities for about 9.5, almost 10 years. And things were great, right? 2 vacations a year, maxed out to 457, retirement plan at the firehouse. I had 2 jobs that I thoroughly enjoyed. And, people always ask me, like, well, what was wrong? Like, why wasn't that good enough? And it's hard to say, but, I felt like I was destined to do something bigger, better. I wanted to be, do, and have more. But primarily, Anthony, I was trading my time for money. And I started to feel it. My wife started to feel it. I was never a stranger to overtime or an extra shift in the hospital. Like, I did whatever it took. But it was at the expense of my 3 beautiful little girls, 12, 10, and 4, and 12, 9, and 4, I should say. And, so that's where I really, I started to get educated about money, about finances, about real estate, about taxes. And I realized that I was on the wrong side of the equation, and I wanted to position myself on the right side of the equation, which is when I got started with my 3-family property.
Now, where is that 3-family property?
So that was in the Westville section of New Haven, because I looked high and low around, New York, even like the 5 counties surrounding New York City, and it was really hard to find a property that was cash flow positive, that I could get good debt on, in a neighborhood that I would actually like to invest in, not be forced to, just to be cash flow positive. So I had to expand my reach, right? I mean, I had to expand, into other places. And I did that property with a friend of mine who lived up there. And, so I had boots on the ground. I had familiarity with him. We had never done this before, so we were nervous. That's why the 3-family made sense to us instead of the single family. But most of all, I needed that proof of concept that this whole thing worked because, Anthony, I don't know about you, but as a New Yorker, I have this like lens through which I look at things of like everybody's guilty until proven innocent, that nothing's as easy as it seems, right? And I needed to be the landlord. I needed to know what it was like to have the grass that needs to be cut or the snow that needs to be removed or the guy that doesn't pay the rent on time. I needed to have that experience so that I could build my confidence and, my portfolio in the process.
Yeah, because it's a 3-unit property, which I'm assuming you were the manager. Is that what you're saying?
Yeah. So my friend and I, Craig, we both self-managed,
Mhm.
and we learned on the fly, right? I mean, I was educating at a furious pace. I mean, multiple podcasts per day, audible books, reading books, subscribing to masterminds, webinars. I mean, like that's all I did. I didn't even realize that there was a top 40 chart for the music anymore because like I didn't listen to the radio for, I don't know, 2 years.
Mm.
So that's kind of how I got my start. I just really dove in. But what I found was that as I was selling my wife on all this, because she listen, she trusts me with finances, and she knows that when I put my head down and I start working towards something, that I'm going to make it happen. But it wasn't as passive as I thought. It wasn't as passive, nearly as passive as she thought. And I bought myself a third job, right? So now I'm a New York City firefighter. I'm an ER nurse at a level 1 trauma center. I got 3 little girls who were really little at the time. And, my wife's like, what's up with this passive income? Like, I thought it was going to be like, set it and forget it. And that's when I realized that, I wasn't going to go buy 30 of those types of properties and self-manage because I hated it, to be quite honest. And I needed to find something different.
No, it makes a lot of sense. A lot of new investors get a little overwhelmed slash burnt out when they're buying 4 unit properties, even 2 unit properties at a time. Even if they can amass 20 of them, it's great, but it's the management that kills you. And then, you try to outsource management and, for those types of properties in our area, because my listeners know I'm in the New York Metro as well. Property management companies want 10 to 15% of your gross income, right? So it really eats up the cash flow. So it's like, kind of have to do it myself to make it work. Okay, so you realize you learn quickly, which is great. So where did you go from there, from the 3 unit?
Where did I go from there? So during this process, let me back up a little bit. Before I bought that 3 family, I joined a mastermind that is like an educational platform for multifamily. And that's where I was getting a lot of my education, my contacts, my information from, and it was tremendous. It was a tremendous asset and resource. So during that process, I had a coach within that platform, and my coach was doing a 43 unit deal in Pennsylvania, and he gave me the opportunity of a lifetime to join him. It was called a real estate syndication or multifamily syndication, which I didn't really know a whole lot about. I never done one. I was never an LP at that point. So to have a front row seat behind, due diligence and debt financing and raising capital and all that stuff. I mean, it was an incredible, incredible opportunity, which I'll be forever grateful for. So I was able to become a general partner, albeit a very small minority general partner in a 43 unit in York, Pennsylvania, that is still printing money to this day. And that really gave me, it made my eyes wide open, right, to the endless possibilities, to what could happen. And I really realized that multifamily was a team sport. And you didn't have to do everything by yourself. You didn't have to self-manage. You didn't have to be the chief cook and bottle washer, right? So I had to figure out where I was going to play on the team. I wasn't uprooting my family. I wasn't going to leave my career yet as a firefighter to go to a sexy location like Phoenix or Austin or Sarasota or, Raleigh, Durham or something like that. I just wasn't there. So I wasn't going to be boots on the ground. I was just learning underwriting, right? So I wasn't going to be the lead underwriter for any kind of deal anytime soon. I can't swing a hammer, right? Even though I'm a New York City firefighter, I should be able to be good with tools. And I am, when I have to be. But like sheetrock and roofing, like that's not my changing out a toilet. No way. Like there's zero chance I'm going to even attempt that. Right. So, but capital raising, when I came around to that, my coach had said to me, Tim, do you want to give capital raising a shot for this deal? And I'm like, Chris, do not count on me, right? Do not count on my brother. Don't count on me. Like, we'll do our best. I mean, I don't know if I could raise 50 cents or 50,000. I have no idea. And he just kind of coached me along. He's like, yeah, this is what you do. And this is how I do it. And, we're going to have a webinar. We're going to have, this investor summary. And it's going to be a PDF. And, he obviously schooled me on, we did a 506B. So we could only have, up to 35 non-accredited folks in the deal and what that meant and how to talk to people. So it was an amazing opportunity. And we ended up raising 150,000 for that first deal. And I was blown away that people in my network, my friends, family, colleagues, college roommates, those are the people I was talking to. And they had an interest. And, a couple of people pulled the trigger, right? And I couldn't believe it. And, I thought, hey, I can build a business around this. I mean, this could be, because a lot of people told me, Anthony, they said, well, listen, Tim, we know you as Tim the fireman, Tim the ER nurse. We don't know you as really Tim the, multifamily syndicator, raising, millions of dollars for deals. Like, let's see how this first one goes. And don't forget, this was August of 2020, right? So we're locked down, nobody's going to work or school or anything like that. COVID is rampant and we don't even know that much about it. And I'm trying to, invest money for real estate. There's a cancel rent movement, right, on the national news every night. So it was challenging, but I saw the opportunity.
No, that's awesome. Great time to get started really on a bigger scale as well in this business. So, all right. So 3 units to 43 units with your partners, because you had a partner on each of these deals, which is good. And I love that you're able to use your broker dealer registration, obviously you're a licensed broker dealer, to try to figure out how to turn the syndication business into something that you can, pool resources, most of the capital together for different real estate opportunities now. And I'm assuming that's what you're doing moving forward ever since.
Precisely, right? So I did 3 deals before I was affiliated with a broker dealer, and that was all, with people who were, in my, education mastermind type of stuff, right? So we all just decided to work together, right? And that team aspect for commercial real estate, really, it's no joke, right? And people gave me, they gave me a lot of opportunities to jump into this world without really having, a degree in, say, finance or, management or anything like that. So we did 3 deals like that. And then we said, you know what? We really want to focus on capital raising. This is my brother and I. We started Cityside Capital, and we said, where are we going to have the most value? Are we going to do our own deals? Are we going to, do it ourselves? Is it multifamily? Is it self-storage? Where do we want to focus, right? Because everyone was saying, you need to niche down until it hurts, right? So we said, we really kind of like capital raising. We're from the New York City area, right? We feel like we know a lot of people with money. I mean, people who we wanted to serve, really, like, hey, look, like, we have this thing, and we have these opportunities. So right about then, it was where we dove into the capital raising space, and we found out that, like, a lot of people raise capital the wrong way, right? They try to just raise capital they try to speed date sponsors and raise capital and get into deals that way and kind of move on. And that's really considered fraud, right? It's securities fraud because you're selling a security without a license. Because when you do a 506B or a 506C deal, you have to have what's called a material participation in that project, right? You can't just raise capital, even though that's a needed piece. You can't just raise capital for a deal. You have to be involved in the due diligence or the asset management, the property management, the underwriting, the marketing, the investor relations, whatever it might be. You have to have more than just sending out the emails. So when Greg and I heard that, we wanted to sleep well at night. We didn't want the, authorities kicking down our door at 3 a.m. and leading us out in handcuffs. That wasn't the idea behind, getting into real estate. So we got connected to a broker dealer that focused specifically on commercial assets like multifamily, like self-storage, like industrial triple net leases across the U.S. with, highly vetted and qualified operators, which meant that we would have, constant deal flow from which, Greg and I could look at the deals. Do we like it? Do we not like it? Are we going to pass? Are we going to work this deal? And, we have a compliance officer, and we have, a legal team, and we have an underwriting, department. And, we have a broker dealer that has been doing, Wall Street capital type allocations for his entire career. Like, it was almost like a too good to be true opportunity. So that's what we did. We ended up getting our Series 82 and our Series 63 licenses. We hung them with a broker dealer, which is based out of New York City. And now we work with 10 operators across the U.S. in all three of those asset categories that we spoke about, and it's been incredible.
So that's an awesome story. So I really love how you found your niche in terms of the role that you would play as part of the general partnership of these real estate deals. I think that's awesome, you and your brother. Um, so let's talk about, so you partnered with 10 operators. How do you find these operators? We could do a whole nother podcast on due diligence of the operators, but is that through your mastermind primarily, the operators you're finding? So tell us about that.
Yeah, so it's all through the broker dealer, right? So the broker
Mhm.
dealer that was started is a guy that came from the Wall Street side, and then there's another guy from Texas that came from the multifamily side. And when they decided to join forces, there was some pre-existing relationships with certain operators, and that's how we got kind of started. So we already had like maybe I don't know, 4 or 5 operators that the multifamily guy in Texas had already kind of worked the deals with, and they formed the broker dealer. They had to do the proper suitability requirements and due diligence and reporting to get those guys kind of on board the broker dealer platform. From there, there's no shortage of groups looking for capital, right? But we wanted to work with, best in class, guys who have been there before, maybe a little bit of gray hair, a track record to speak of, because at the end of the day, this is people's, cash and retirement accounts and future. And we wanted to be good stewards of their capital by, pairing them with, highly qualified operators, in our opinion. So that's basically how we got started. So, over the years, we've added more operators, from industry relationships or people reaching out to either myself or one of the other representatives, registered representatives, or even directly to the broker dealer.
Yeah, that makes a lot of sense. And those, like you mentioned, your broker dealer has had relationships with these operators for possibly decades. So give you and your partners and your brother more of a comfort level to invest in different deals, or park the money that you guys are able to bring to the table from your network into these opportunities, which is great. And that's, you said it's over 3 different asset classes. And which one's your favorite, by the way? Multifamily, industrial, storage, which one?
Um, I'm going to say multifamily is my most favorite. I'm most intrigued by the industrial space, though. Something I never thought I'd be in, but the more I have worked with it and learned about it and invested in it, it's just incredible, the opportunity.
That's awesome. And what percentage of deals, like you mentioned, is probably primarily skewed towards multifamily? Is most of the capital allocated towards? Yeah.
Yeah, I would
Okay.
say 85, 90% of the capital is multifamily, and the rest is self-storage and industrial.
And what kind of opportunities are you guys seeing now moving forward, and what you're focusing on from, obviously it depends on the operator's deal flow, but what checks all your boxes for a certain deal? And we're recording this in the middle of August of 2023. So for the audience, keep that in mind.
Yeah, I mean, so the last 2 deals that we've done have actually been in the Dallas-Fort Worth area, with one of our operators, and one of them we bought from Blackstone, the B REIT. I'm sure you guys have heard about it in the news, right? They have a real estate fund that they had to gate redemption requests down to quarterly, right? Because people got scared of the rising interest rate environment and the lack of liquidity, so they had to sell. They had to do a fire sale, and we picked up one of their assets. Another one we're about to go live with next month, also in the DFW area, is a distressed seller, right? They didn't have a rate cap, and the interest rate shot up on them. They had a variable rate mortgage, and they're bleeding cash every month due to debt service. So it's opportunities like that we're kind of finding, off market, before it hits the news wires and the banks have to foreclose. These are the types of deals that are now being shopped around by some of the brokers. People may still eke out a profit for their investors, which is great, but there's other people that will be or are starting to be in trouble, and fortunately, unfortunately, we're there to kind of be the option for them.
Yeah, no, it's a great time to start looking for those opportunities, I feel, as well. Can you tell us about your podcast? I know I mentioned it in the beginning.
Yeah, so my brother Greg and I'm the youngest of three boys, right? Greg is the middle guy. He's 4 years older. He lives down in Charlottesville, Virginia. And we started a podcast called the Passive Income Brothers Podcast. And it has been the joy of a lifetime to be able to work with Greg and now to be on a podcast with him. And, just kind of have that brotherly banter with some real estate mixed in and some success and some personal growth and development. We have a great time. We have some fantastic guests, and I truly feel like we're just getting started. So the podcasting has been a great space to be in.
That's awesome. And so, what's the best way as we wind down the show for my audience to find you, learn more about you, and yeah, connect with you?
So you can call me on my cell phone. The number is 516-521-7762. Or head over to my website, which is citysidecap.com. I'm on all the socials. Just search Tim Lyons, Cityside Cap, and I'd be happy to connect.
Yeah, and we'll have a link. I'm not sure if you want me posting your cell phone number, unless you do.
Go
But
ahead. No, go
okay,
ahead.
no
Because
problem.
nobody
So
really calls anyway. You give it out, nobody really calls anyway,
until
right?
somebody does.
Unless they're really interested, and that's the call that I want to get.
Absolutely. And so we'll have a link to Tim's cell phone as well as his website and all his social media handles in our social media post as well for this show. And you can find, this episode on iTunes. And if you do, please give us a rating and review. It helps the algorithm out, so we get our message out to a greater audience. So we really would appreciate that. And really want to thank Tim for coming on the show today and giving us some pretty valuable wisdom, and definitely connect with him for the audience. And hope to talk to you again soon, Tim.
Well, Anthony, thank you so much for the opportunity to be with you today, and I look forward to doing it again.
Absolutely.